Hey, welcome back. Let's get right into it. We just added this nav bar so that we can navigate between the different sections of our site. We can go to our stock list, our strategies, and our order history. And we can also now filter on the different Tulip technical indicators that we're storing at the end of the day. And now if I click on the strategies page here, you'll see we only have 2 strategies so far based on the opening range, and I said we would add a new strategy, and so we're going to do that in this video. So I thought we'd just cover something we covered in a previous video, and we'll just use Bollinger Bands since I wanted to cover Tulip indicators not only on the daily, but I want to use Tulip indicators on the intraday so that minute by minute we can check on a technical indicator and place a trade based on the value of one of these Tulip indicators. So let's go ahead and implement that. So I'm going to pull up the chart for just a popular stock. So we'll just go to Apple, for instance, right? And we have TradingView charts built into our application and prices. I've snapshotted everything up till this point. So this is the night of November 5th. So definitely update your populate prices if you haven't already to make sure your prices are up to date. And so I have Apple right here, and I'm going to click this FX here, and we're going to add Bollinger Bands as an indicator. So if you're unfamiliar with Bollinger Bands, I already covered it in this channel in this video, TradingView Strategy Alert webhooks with Heroku, Ngrok, Discord, Alpaca, and Python Flask. So this is an hour-long video. It goes over how to write a Pine script that implements a Bollinger Band breakout strategy and sends alerts to a Flask app and executes trades. So I recommend looking at this if you want a more deeper explanation of Bollinger Bands and how they work. So I'm not going to spend that much time on Bollinger Bands, but know that Bollinger Bands have this envelope around your price action, and this red line in the middle is just a moving average. And so if you look at the settings here for the Bollinger Bands, you'll see by default there's a period or length of 20, and there's this number of 2 standard deviations, and that's the usual settings. And so there's this moving average down the middle, and then this upper band is 2 standard deviations above, and then this lower band is the price 2 standard deviations below. And so the idea is that 95% of the price action occurs within these bands. So you'll see it rides the lower band, and then it bounces up to the upper band. And there's a good chance if something's been on the upper band for a while, there'll be a reversion to the mean at some point. And then you can also see where Bollinger Bands tend to narrow when there's a period of low volatility. So you'll see like this particular point where price is consolidating. These bands are really narrow, and then these bands will expand when the volatility increases, right? And this is like, and so you see these standard deviations are further apart. So it's narrow, then it expands, and you see the price moves really quickly, strongly trends down, and eventually there'll be another consolidation period, and right here where they narrow, and then the bands expand, and there's volatility, and the price makes a rapid move in a certain direction. So that's a quick summary of what Bollinger Bands are, and so we're going to use those to implement a trading strategy similar to how we implemented the opening range breakout strategy, right? So I'm on the 1 minute time frame for Apple stock, so you can see it here, and you'll see the Bollinger Bands here. And then let's just decide on a simple strategy to use with Bollinger Bands and implement that. And so this will give us a really easy way to define an entry and exit. So you can see this is the open of the day, and you'll see there's times where Apple stock falls down to the lower Bollinger Band. And so some people trade it in such a way where if it goes below the lower Bollinger Band, you expect it to revert to the mean. So you expect this to revert to this middle area, or even revert and go all the way to the upper Bollinger Band, right? And then the other way you can trade this is to say, if it breaks the lower Bollinger Band, then it's a really strong trend, and you can ride the Bollinger Band all the way down. Okay, so we'll do a simple mean reversion here, and so we'll say, how about when the previous candle closed below the lower Bollinger Band, and then the next candle is a green candle that closes above the lower Bollinger Band. We'll just enter a trade, and then we'll define a certain amount of risk. So we'll set a stop loss below the red candle that closes below the lower Bollinger Band. We'll enter the trade at the close of the green candle here, And then we'll just take profit kind of early. So we'll just calculate the range of this candle and multiply it by 3. And we'll try to capture, this small move here and then have our stop loss set right down below. And that's it. Let's code that up in Python real quick. All right, so we have our strategy screen that only has 2 records right now. And so we can go to our DB browser, or we can go to our command line and just insert a record real quick. So we just need a record inserted into our strategies table. So I'll open AppDB, and then we can browse data and we can look at our stock strategy table. And if you've been following along already, you know that we can just insert into this strategy table. And so let's just write insert into strategy, and then we're going to just insert a name, and then the values will be, and we'll just call it Bollinger Bands. Okay, so we'll put that in there. We could build a UI to insert these as well. Okay, so that's in there, and then I'll just close the database and save it. And that should be on our screen. So if I refresh the page, you see we now have a Bollinger Band strategy, and then I can add a stock here. So if I go to Apple, right, which I just had open, we have our apply strategy. This is all database driven now. I can apply Bollinger Band strategy to Apple stock, and now it's in this Bollinger Bands table. So let's write our script that will pick up all the stocks that are in the stock strategy table, like we already did, and code this algorithm out, right? So I'm going to open Visual Studio Code, and let's go ahead and create a new script here, and I'm going to call it Bollinger Bands. So I'll call it Bollinger Bands .py. So that's good. And then all we need to do is select these. So this is going to run every minute, and it's going to check on the candles and execute trades. And so our opening range breakout, you should have already coded that by now. And if you haven't, definitely do so. Don't just try to copy this, or you won't be able to keep up. Probably you want to make sure you understand all of this stuff. And so I'm going to copy some of the stuff at the top here. And so we can copy quite a bit of this. So let's go ahead and copy it up to here, and we'll put this in our Bollinger Band script. And I'm going quickly past a lot of this stuff because we've already covered it. So we need SQLite, we need our config, we import the trade API. We don't need the notifications. We won't do notifications here. Import date time. We have our utility function for daylight savings time, and we can print out the date time just to put that into our trade log. I don't need that context. So the first thing we need to do is connect to the SQLite database. We get a cursor. We select from the strategy table where name equals. And so we're going to select the Bollinger Bands strategy like that. And then we'll get the strategy ID by fetching the results of the SQL query. And then we use the exact same join, pass it the strategy ID, and then this will give us all of the stocks that we're applying the Bollinger Band strategy to into this list of symbols, and we're good to go there. So we don't really need this opening 15-minute range anymore. So we'll just have start minute bar and end minute bar, and then we'll just set this to the full day. So we'll just do, it starts at 9:30 and it ends at 16 o'clock, and that'll be good there. So those times are useful to us. Okay. We initialize the Alpaca Trade API. We get our existing orders. That way we can check for stocks we've already ordered, because we don't want to reorder a stock if we're already in the trade. We initialize a list of messages. That way we can either send notifications or print those messages to our log at the end. And then we loop through all of our symbols and fetch the minute bars. Okay. So far we already added Apple to the stock strategy table and applied the Bollinger Band strategy. So we'd expect this symbol list to already have Apple stock in it. So I'm going to print a symbol, and I'll just print the minute bars and see if it's working. Okay, so I'll stop that, and let me run this. Okay, and there you see it. It picked up the fact, so it printed the timestamp of when I ran this. It printed the symbol, Apple stock, and then we have the minute bars for today for Apple stock. So tomorrow, when I let this run, this will start at 9:30. So it'll start in the pre-market, but we're not going to really start processing these bars until the market is open at 9:30 a.m. or 6:30 a.m. where I am. Okay, so we'll start getting minute bars, and then we just need to process those minute bars. So as we did before, let's go ahead and filter down this list of bars to the ones where the market is open. And so if you'll remember, we created this row mask here, and we can copy this. I really shouldn't be copying this much code. Really, we should divide this out into functions and build a library. And that's something I'll do when I do more of a course form. I'll have nice reusable functions and objects and things like that. But for this, we're just writing a bunch of scripts as we think of them. So we can just bust this out. So we have this opening range mask, but we don't really need the opening range. So we'll call it the market open mask. And then we just need where the minute bars is greater than the start minute bar, so greater than or equal to 930, and less than the close, and that'll be our market open mask. And then all we need to do is we can filter down our bars to use this opening mask. So I'll just say market open bars equals minute bars dot loc bar mask. Okay, and that should get us just the bars where the market was open. So if I print that, minute bars is not defined, forgot an underscore, print that out, and bar mask is not defined. Market open mask. Okay. So you'll see now I have the bars that are between 9:30 a.m. and 4 p.m., which is when the market is open on the East Coast. So similar to moving averages, if it's only the first day, you can't really calculate a 50-day moving average. You got to wait till there's 50 days to calculate. So since our Bollinger Band defaults use a 20 period, we'll need 20 minutes first. So we won't do anything until the market's been open for 20 minutes. So we'll say if length of market open bars is greater than or equal to 20, then we can start processing it. All right. So if we look at our chart of Apple for today, for instance, and we look minute by minute, so I went to the minute time frame, and then we look, and then each time a new minute bar is going to come in, and eventually we're going to calculate and see that this candle closed below the lower Bollinger Band, and maybe not that one, maybe it's not till this point in time. So like 10:27 or 10:28, 10:26, it closed below, and then there's a green candle afterwards, right? And so let's try to make sure we can detect that in today's price action. Okay, so we already have our minute bars, and so what we can do is look at, so let's just pretend the market is only open from 10 a.m. or 9:30 a.m. till 10, and then that exact bar right there, 10:27 or 10:28. Let's do 10:28. Okay, so that's my start minute bar and end minute bar. And so this script is running minute by minute, and then it ran at 10:27, for instance. So it gets all the bars, it calculates that there was greater than 20 bars so far, and then we need to calculate the Bollinger Bands. So to do that, we just get the closes of all of the bars. And so we already have the market open bars, and then so we can get the close values. And so if I print the closes, right, you'll see this NumPy array of closes, so 117, 117, 21. So we have all of our closes, and then since we have Tulip indicators imported already, we can say the Bollinger Bands equals Tulipi, and Tulip has a Bollinger Bands function, and it's called bbands. Okay, so let's look at Tulipi, and we can see a list. So they have the Bollinger Bands function here, and you see that it returns the lower bands, the middle band, and the upper band. So that's the output. So we just need to pass it the data, a period, and standard deviation. So I have Tulipi here, and so I just need to pass it my closes, and then the period we decided is 20, and then the standard deviation by default we're using 2 standard deviations. Some people make it like a 3 standard deviation move, so it has to be like way far away from the middle band. But we'll just use the standard of 2, and so those will be our bands. And then it actually returns it as a tuple, so I can do lower, comma middle, comma upper equals Bollinger Bands 2022. So if I print the lower bands, right, we should get another list of numbers here. And Tulip is not defined, so I didn't have that imported. So I'll import that, run it again. So now that we have a NumPy array of the closes, right? We have a NumPy array of the closing values, and we have a NumPy array of the Bollinger Bands, the lower Bollinger Band, right? We just want to check if the last close is below the last price that formed the lower Bollinger Band to see if it closed, 2 standard deviations below the middle band, right? And so we're looking for this price. So we tried to isolate it at 1028 here, right, to capture this one to test it out. So this is the lower Bollinger Band, and we're finding this close that's below the lower Bollinger Band that happened at 1026. So let's print what the actual last bar is. So we have all of the market open bars that we've processed so far in a data frame, right? Because we have this minute bars and then engine.df. And so minute bars is a data frame. Market open bars is just minute bars with this mask applied to get the bars that are between these two times, right? So all we need to do to get the last element in a pandas data frame is we'll just print market open bars dot iloc -1. Okay, -1 is the index of the last item, right? And so this is the bar that happened at 1027, which is, oh, that's the green bar. And so let me bump this back to 1027 here, and then this should get me the red bar, right? So you see this is the bar that happened at 1026, and you'll see the close here of that bar would be below the lower Bollinger Band. So the lower Bollinger Band, the last one, is 117.7, and this close was at 117.59. So what I'll do now is store the current candle and set that equal to market open bars dot iloc -1, right? The current candle is the last one in this list, and then we'll get the previous candle, and that'll be the previous one, the second to last in the list. So we'll do market open bars dot iloc -2. Okay, and so that'll give us access to the current candle and the previous candle. And so we just need to check if the current candle dot close is less than lower -1. So if the close of the current candle is less than the last Bollinger Band value, then we'll print closed below the lower Bollinger Band. Okay, so 1026, at 1026, this price closed was below this lower Bollinger Band, which is the last item in that list. And then at 1028, so if we advance this by 1 minute, right, what we can do is look at the last candle. And so our rule for entering this trade is going to be if the current candle's close is actually greater than the lower Bollinger Band, and the previous candles, this -2, and the previous candle close is less than the lower -2, right? So we're detecting this case. So we're going to be processing this green candle. That'll be our current candle, and we'll check if the previous candle closed below the lower Bollinger Band and the current candle closed above the lower Bollinger Band, right? Current candle closed above the lower Bollinger Band, and the previous candle closed below that second to last item, then that's our entry signal, right? So we're gonna, instead of printing this, we'll just say symbol. So we'll do an F string, and we'll just say symbol closed above lower Bollinger Band. Okay. And then we'll just print the candle itself, so we can print a current candle and make sure that works. All right, so we've actually tested that we have a successful entry point. And so if I were to process this at 1025, so yeah, if we run it for a previous minute, it doesn't detect it yet, but once we get to 1028, then the signal gets detected, and we know that it closed above the lower Bollinger Band, and we can enter the trade. Okay, so now let's go ahead and just remove a bunch of these print statements that we don't need. and let's just execute our order. Okay, so don't need to print the closes anymore. Don't need to print the lower Bollinger Band anymore. And we'll just narrow this down a bit. And then now we just need to place our bracket order, right? And so in our breakout script, we already have this. So we can take this bracket order, this part, and then we can say if symbol is not in existing order symbols, we can place the trade. So we'll indent this out. Okay, right there. So if the previous bar closed below the lower Bollinger Band and the current candle closes above the lower Bollinger Band, that will print a message, right, of the symbol, and then we can print the current candle, sure. And then if the symbol is not in our existing order symbols already, then we can place the order. Okay, so let's see, print placing order for symbol at limit price, and our limit price in this case would be the current candle's close, right? So the current candle's close, and that'll be where we place our limit order. And then we're going to submit the order. So we're going to buy whatever the symbol is, and the side is going to be the buy side. We're going to buy, we can do a limit of 100 day bracket order. We'll order at the limit price. The limit price is the current candle's close, and then we'll take profit at where? We'll calculate, let's calculate the range of the current candle. And so, for instance, this green candle is the open, high, low, close. So the high is 117.84 and the low is 117.59. So we'll take the high minus the low. So the range of this candle, right? So we'll take range, or candle range equals current candle high minus current candle close. Okay, and that'll be our range. And then so we'll take our profit at limit price plus candle range times 3. So let's aim for 3, whatever the range is, open the low to high of the candle that closed above the Bollinger Band. We'll multiply that times 3 and try to calculate, get that much profit. And then our stop loss will be just below the previous candle's low. So we'll just say stop price is previous candle dot low, right? And that'll place our order. We can catch an exception if we couldn't submit the order, and then we can also print if we already have an order. Okay, so I'll run that. And cool, so it prints placing order for Apple at 117.75, right? And so this candle right here closed at 117.75 here, as you can see at the top. And so that's where we'd place the order. If I go to my Alpaca account here and refresh, let's see if it placed an order, right? It placed a limit buy at 117.75, limit sell at 118.01, and then a stop loss at 117.58. So that seems a bit narrow, actually. Let me see what the range is. So the candle range, oh, I said current candle high minus current candle close. I meant current candle low. Okay, so that makes more sense. So I'm going to cancel that out. And then, yeah, let's go ahead and try this one more time. So I'll run that. Okay, placing order at 117.75. Now if I look, the limit buys at 117.75. There you go. The limit sell would be 25 cents. So there you go. Now it has the limit buy at 117.75. We're trying to take a quick profit at 118.54, and there's a pretty tight stop loss here of only 17 cents, right? 2 cents, 17 cents, right? Okay, cool. So yeah, that looks pretty good. And that's really all we need. So we have a script here, and this is basically repetitive, a lot of copy paste from the last program, except we're using the Bollinger Band strategy. We add it to our strategy table, getting the minute bars, and then we're using Tulip indicators this time to calculate the lower Bollinger Band, the lower, middle, and upper Bollinger Band. And we're only using the lower one and going long this time. And we're just checking if the previous candle is below the lower Bollinger Band, and then the current candle closes above the lower Bollinger Band. And we're just trying to expect a quick reversion to the mean and capture a few bars rather than waiting for it to go to the upper Bollinger Band. So yeah, that should work. And then all I have to do now is go to my cron tab like I have before. And then we can just have this run. So I can just copy this line, and let's see if this can just run in parallel. So this is running every minute between my time, 6 a.m. till 12:59 p.m. on Monday through Friday. And instead of opening range breakdown, I'm running the Bollinger Band.py, which I just tested out. So Bollinger bands.py, and then it's outputting all those print statements to the trade log, and I'll be able to check what happened tomorrow. And I'll write that to the cron tab file and save it. And so that's it. We coded a new strategy. We used Tulip indicators intraday, and we added the strategy to our table, and this is ready to run. So we can run multiple strategies in parallel, and I'm not going to spend time going through and picking a bunch of stocks here. I'll add some to the list, and then we'll check on it this weekend and see how it did. So thanks a lot for watching, and see you in the next video.